Hi everyone, welcome to Payroll. This is a Cengage textbook, Payroll Chapter 3. This week we're going to talk at length regarding Social Security taxes. So, to be covered for Social Security, the individual has to be an employee of the company. If the service that the employee or the individual renders is called employment under the guidelines of the FICA law. If the compensation the individual receives is called taxable wages, then they are required to have FICA withheld from their earnings. There are also individuals that are known to be independent contractors. Now, there are very strict rules regarding who is an independent contractor and who is an employee. Every person is an employer if the person employs one or more individuals for the performance of services in the United States. A person is an individual, a trust, an estate, a partnership, or a corporation. Employment applies to any service that's performed by employees for their employer. Doesn't matter the citizenship or the residence of either the individual or the employer, they would still be considered employed. Now, there are occupations that are deemed independent contractors. Agents and commission drivers of food and beverages, or handling laundry or dry cleaning. Full-time life insurance sales people, full-time traveling or city salespersons, and oftentimes full-time sales in a variety of ways, especially realtors, real estate. Also individuals working at home on products that the employer supplies and that then get returned based on furnished specifications. They spell out exactly what needs to happen. Now, there are government employees that may be exempt from Medicare based on when they were hired. Or there are expatriates. Now, expatriates is when a U.S. citizen leaves the country and goes and lives somewhere else. Expatriates can be exempt from FICA. There's some guidelines with 20 countries involved. Expatriates are subject to foreign Social Security taxes, so they may no longer be subject to the United States Social Security, but they may be subject to the place that they're currently living. Certain family employees, if they work as an employee in a sole proprietorship for their parents, they can be exempt from FICA under 18 years of age. Certain household employees, if they only make $2,700 cash wages in a year. However, the household employees can be a little tricky. Technically, they should be considered I won't go into that yet. There's so many exceptions to this. Anyway, there are inmates or possibly medical interns, student nurses that have unique situations that apply to them. But basically speaking, most people are employees of a company. There are times that individuals are independent contractors. They have their own trade or business, and employers, since they aren't an employee, don't withhold FICA taxes on independent contractors. Many employers try to get by with saying their employees are independent contractors. If you get caught, they can slap your hand significantly. But, you know, I know in Minnesota right now they're really cracking down on this in terms of contractors for building. So guys, which of the following employment types is fully exempt from FICA coverage? Services performed by student nurses such that the pay received by them equals the regular wage. Services performed by students for a private college while being enrolled and attending classes in another college. Delivery of newspapers or shopping news, including delivery to a point of subsequent delivery by individuals above the age of 18. Or services performed by civilians for the U.S. government if such services are covered by a retirement system established by law. In this case, if the student nurse is in the employment of a hospital or a nurse's school that's approved under state law, and the nurses are enrolled and regularly attending classes at that school, then they would be FICA exempt if their work is pretty nominal and their pay is nominal. Okay. Students are exempt if they're working as non-career employees while enrolled academically at least half-time in a college. It's not related to someone who's working 40 or more hours. Okay. But D was the correct answer. The services performed by civilians for the U.S. government, and the services are covered by a retirement system that's established by law. So, taxable wages can include cash, which would be wages, salaries, the cash value of meals and lodging provided for employees' convenience or not, provided on the employer's business premises. They can include bonuses and commissions. And certain gifts, if they're over a certain dollar amount, could be added to wages. Stock payments. So in lieu of cash, if they receive stock, that would be a taxable wage. Or certain fringe benefits may be a taxable wage. If you have a company car and you're allowed to drive it for personal use, that personal use will be added to your paycheck. I know for employees that work for the airlines, they do not consider traveling non-revenue as a taxable fringe benefit. It says on this slide, flights on employer-owned planes can be considered fringe benefits. Tips greater than $20 or more in a calendar month are considered taxable wages. But what's exempt? Meals and lodging on the business property for the employer's convenience are exempt from being included in wages. Sick pay can be exempt. pay for difference between employee salary and military pay for soldiers and reservists activated for more than 30 days. What else can be exempt is the employer contributing to a retirement plan. Now, that's exempt because the retirement plan is tax deferred until they begin taking it out. Employer-provided educational assistance is not taxable up to $5,250. Also, payments for non-job-related expenses up to $5,250 related to the education. In addition, you don't have to pay Social Security or FICA on that. So, this question, you work as a tax consultant at a consultancy firm. One of your new clients has a food and beverage establishment. The establishment has increased its scale of operations recently, and the number of employees of the establishment has been increased to 20. Tipping the employees is customary in the establishment. Currently, the establishment does not report any tip income in its employees' Form W-2, and it wants to continue that same tradition. Help the owner of the establishment understand the need to report tip income. Well, as we saw earlier, if employees receive tips in excess of $20 a month, it should be taxable. And usually, with the employers, there are guidelines regarding how the employer will have to allocate the employees that are supposed to be tipped a certain percent of the gross receipts of the establishment. So it's beneficial for the employees to voluntarily report their tips. If there are not enough tips that are being reported, then they need to be allocated by the employer. Employers withhold FICA taxes only on the tips reported by employees, not from tips that are allocated. The Old Age Survivors and Disability Insurance, OASDI, meaning what you pay Social Security taxes on as of 2024 is a wage base of $168,600. So if an employee makes $400,000, they only have to pay the FICA on the first $168,600 they earn. After that, they do not have to pay any more FICA tax. Now, if they worked at one company and they made $140,000, and then they worked at another company and made $140,000, both companies are required to take out FICA, and that employee can get back the difference, that amount they paid in FICA taxes over the $168,600 on their tax return. The 1.45%, the hospital insurance, it doesn't matter how much you make as a wage, you continue to pay the 1.45% on all income, all wages. So in this case, Tamara earns $173,760 per year and is paid semi-monthly on the 15th and 30th. Determine FICA for the December 31st payroll. So she's gone over the amount. She's gone over the 168, is it? 168.6. So it shows before this payroll, she's at $166,520. So she needs to pay Social Security just on the $2,080 of wages that allow that to max out at $168.6. After that portion of her wage, she no longer has to pay the the OASDI portion, but she still has to pay the health insurance portion. Okay? Sandbit earns $225,000 per year and is paid monthly. Determine FICA for the November 30th payroll. First, find the prior year payroll year-to-date gross, the $225,000 divided by 12 months, so you know exactly how much he's making per month. So if we take that $18,750 and figure out how much he made up through October, then he was paid $187,000. So since he already went over the $168,600 on that OASDI, he won't have to pay any OASDI on his November pay, but he will have to pay the health insurance, the hospital insurance piece. If Sambit earns $225,000 per year and is paid monthly, how much will be taxed for the hospital insurance or the health insurance? Sorry, hospital insurance. I apologize for that. So in that case, you would figure out the amount per month that he pays, or that his wages, $18,750. At the 1.45%, he would pay $271 for the base 1.45%. And then he'll have an additional 0.9% additional hospital insurance once he goes over $200,000. So he will pay the 1.45% hospital insurance, and then once his pay goes over the $200,000, he pays an additional $56.25 of that amount that went over $200,000. Now, the employer has to match everything that the employee pays. So the FICA, the OASDI is matched, and the hospital insurance is matched, but the employer doesn't have to pay that extra additional insurance. Okay. Celia's wages from her job are $170,000, and her self-employment income is $15,000. How much is her FICA on the $15,000? Since she is already maxed out with her job, the one because she's earning $170,000 from her job, on her self-employment income, she's not going to have to pay the OASDI, but she will have to pay the hospital insurance, and she pays 2.9% because she has to pay the employee portion plus the employer portion, so 1.45 times 2. Preben's wages from his job are $68,250, and his self-employment income is $94,500. How much is his FICA on that $94,500? Well, it's going to be all of it because, again, the first $168,600 you pay the OASDI on. So the $68,250 plus the $94,500, he still hasn't hit the maximum yet. So he would pay on the $94,500 both the employee and the employer side. So 6.2 plus on the employee plus 6.2 on the employer is 12.4%. And then the hospital insurance he'll pay on all of it. The SS4 form allows you to receive an employer ID number. Now you can file this or be able to file this online through the irs.gov website. The SS4 allows you, when you've established a new entity or a business, to get an employer ID number for that business. An SS5 form allows you to get a Social Security number. Employers can verify up to 10 names and Social Security numbers per screen or upload files of up to 250,000 names and get the results right away. So basically, and this is on the Social Security government website where you can sign up as an employer and confirm that the information that an employee is giving you is in fact correct. There are returns required by employers for withholding wages. Each quarter, an employer has to file Form 941, the quarterly federal tax return. And this basically shows the wages that were paid during the quarter, the amount of federal taxes, Social Security taxes that were withheld from the wages. Excuse me, one sec. Okay, sorry about that, guys. Okay. Employers who owe $1,000 or less in employment tax per year can file, instead of the Form 941, can file the Form 944. And this Form 945, annual return withheld federal income tax, is filed for pensions and IRAs. Most employers file the 941 forms. So Joseph is a self-employed person and is a citizen of the United States. His wife, a U.S. resident alien, started work as a scientist in a private company. She doesn't have a Social Security number, and she will be filing U.S. tax returns for the first time. Stella's friend has suggested she fills Form SS4 and submit it to the IRS to get a Social Security number. No, it doesn't work that way. Under the Social Security Act, every employee and self-employed person has to have a Social Security number. You can go to a Social Security or IRS office to get the application. The Social Security Act requires applicants for a Social Security card. They have to confirm what their age is, their identity, and U.S. citizenship or lawful alien status. Usually it's best to apply in person because they want to hold on to those forms. So when you provide them and give them your birth certificate, it's a little scary that they have your original document, so it's nice to apply in person. FICA taxes and income taxes are withheld from the paycheck and are deposited depending on the amounts. It can be the next day after payroll is done, or it can be a couple days later, or it can be weekly or semi-weekly or bi-weekly or monthly. Each November, the IRS lets the employers know if they're a monthly or semi-weekly depositor. So basically, a lot of it depends on how much is being deposited. The one-day rule states that if $100,000 or more of federal payroll tax liability is due, the taxpayer has until close of the next banking day to submit it. Hey, you're paying, they want their money as you're paying it. No deposits required if employment taxes are less than $2,500 for a quarter. You can write the check and turn it in with the 941 form. New employers are monthly depositors unless $100,000 plus of liability triggers a one-day rule and then converts them automatically to being semi-weekly. The original paper-based system is no longer. It now is used by being electronic, of course, unless you have less than $2,500 in paying into federal taxes in a quarter. Then you can pay it by mail. But all of this is done electronically through a system called Electronic Funds, EFTPS, Electronic Funds Transfer, EFTPS, boy, I don't even know. Electronic Fund Tax Payment System. Okay? You can make those payments directly through the EFTPS, and it goes from the bank account to the treasury account, or the employer can ask their bank to send those payments directly to the Treasury's account. So let's look at this question. Most employers must now make their deposits via the electronic federal tax payment system. Which of the following is a feature of it? Basically, everything, those initial ones were wrong, but D, in EFTPS, through a financial institution method, the employer instructs the bank to send each payment directly to the Treasury's account at the Federal Reserve Bank. Okay? So the 941 form looks like this. This is the top portion. Here's the bottom portion. It starts with the employer's tax ID number or the employer identification number and their name and address. It states which quarter that's being filed. And then it goes through always how many employees are being covered and the gross wages. And then along with that, federal taxes withheld, the Social Security wages and Medicare wages for both the employee and the employer portion, the totals, and then the deposits that were made throughout the quarter. Then on page 3, you can spell how much the tax liability was for each month of the quarter, and then you have to sign your name. Most of the entries are pretty self-explanatory. There are several tax adjustments. So there can be an adjustment for the Social Security and Medicare tax on unreported tip income and the employer's share of FICA taxes on tips reported. fractions of cents, and sick pay. Tips and group life insurance, uncollected FICA taxes on tips and group term life insurance premiums, and then the qualified small business payroll tax credit for research activities. For part 2, you got to check the appropriate box if you're a monthly scheduler. You got to enter your liability by month. Pretty straightforward, guys. You need to sign the return. Can be signed by the employer or who is basically paying the tax. So in order to complete this form, one will need the register, the accounting books for the wages and salary, any tips, and just all the information regarding what was withheld from the paycheck regarding the OASDI and hospital insurance. Okay, so you make a deposit with Form 941 only if your taxes for the quarter are under $2,500. If they are, the 941 has a voucher you can attach and write a check and mail it in. You can use credit card too. Their electronic filing options are what's most common. So you basically pay in through the EFTPS website, and then most people have either a payroll system or they have the software that electronically file the 941s for them. If there's a mistake made on a 941, you have the ability to file an amended return called a 941X. And guys, when we're talking about penalties, well, that's one thing for sure. When you're dealing with payroll taxes, the penalties are significant, there are many, and they are steep. If you don't file it on time, you can get hit. If you don't pay the full amount on time, you get hit. If you don't pay when you're supposed to be paying, monthly or semi-weekly, you get hit. If you don't provide the employees with pay stubs or W-2s, you're going to get in trouble. If you don't file information returns on time with the IRS or with the state, you can get your hands slapped too. So just know there are penalties. And when one is doing payroll, it's not your money. It's someone else's money that you aren't privy to holding on to. That's one of the reasons the IRS is so rigid about the various penalties. Okay? I hope that's helped you. I will have another lecture to help you with homework. Guys, have a great week.